Very good, thank you. Yes, I'm very excited to be announcing this panel. So it's good morning to everyone. It's another day. We've got another panel. I think it should be very interesting. You're discussing the implications of technological advances within the wider digital revolution for the financial markets. So tackling some of the most pressing issues surrounding this topic, we are joined by several experts to discuss topics ranging from the new versus traditional banking debate to the potential of triggering entrepreneurship. I introduce Henrik Jonsson, Deutsche Bank's co-head of capital markets and European investment banking, having previously operated its EMEA and later global DCM and debt syndicates. It is particularly exciting to have Mr. Jonsson attend the summit as a speaker. As you will have heard if you were here for the opening speech, he in fact co-founded the Warwick Economic Summit back in 2002. Corrado Passa, CEO of Illimity Bank and former Minister for Economic Development and Infrastructure in Italy. In the banking sector, as CEO first of Ambro Veneto, banker in Intesa, and finally in Intesa San Paolo, he helped build one of the most solid European banks. We welcome Bastian Nomenaka, co-founder and co-CEO of Celonis, global leader in execution management systems. Since 2020, Mr. Nomenaka has been a member of the Young Digital Economy Advisory Board of the Federal Ministry of Economics and Energy within the German government. And to chair this panel, I welcome Elisa Martinizzi, a Bloomberg opinion columnist covering finance and former managing editor for European finance at Bloomberg News, an expert on reporting on global banking, capital markets, and corporate finance, and recipient of the New York Press Club Award for Business Reporting 2012. To our audience, don't forget to use Slido to ask the panelists any questions you have of the direct debate by following the link in the chat with WES 2021 in all caps. So, ladies and gentlemen, without further ado, the digital revolution for the financial sector panel.
Well, thank you very much. I'm not quite seeing Henrik yet, but I assume he's on. I think 2020 was, an absolutely extraordinary year for the financial industry. It underwent, its biggest stress test ever, as companies and households were running out of cash. And so far, in part thanks to the interventions of policymakers and regulators, it has emerged largely unscathed. But we've got a health emergency and an economic crisis, along with record low interest rates and bond yields, which continue to challenge the industries in ways not really seen before. And once government support measures cease, notwithstanding the progress that we're seeing in vaccine rollouts, it's really not clear to what degree companies and households will be able to keep up with their debt payments. So entire industries are being transformed, and the repercussions are going to potentially rip through the entire financial industry. At the same time, though, you have digitalization, which is rapidly reshaping how we interact, how we do business, and how companies themselves are run, which is creating immense opportunities for disruption, but also for growth and for entrepreneurship. And debating this topic with me today, I'm really thrilled to introduce this panel, given it brings together, some of the leading executives across finance and technology, bringing different perspectives and broad perspectives to what we're trying to shed light on what lies ahead. So I thought we might start by asking the panelists to just briefly introduce themselves and say a little bit about their background and what it is that they're doing at the moment. Bastian, can I start with you?
Sorry, Osmund. Sure, thank you for having me. Really great to be here on this panel. So yeah, let me give you my view. So I fully agree. So the banking industry, if we look at it, we currently see a rapid digitalization. This is what we see Celonis across the globe in all our customers, no matter what kind of country they're operating in. And I think this is especially with the COVID-19 environment even more accelerated. And there's obviously disruptors moving in like PayPal, Apple Pay and others, where it becomes much more relevant if we're all at home working from there, and there's even more requirement for such kind of services. I think this digitalization reaches all areas of the business. So from direct customer interactions in the credit business, stronger compliance and regulatory requirements. And of course, the background operations of the financial institutions have to face this also and handle this massive increase in business. So my name is Bastian Nomna. I'm co-CEO and co-founder of Celonis. What we at Celonis do is we offer the execution management software. So we use process mining and AI to analyze and reconstruct organizations' digital footprints based on their IT systems and make intelligent recommendations. So we provide a data analytics solution for common management and consulting problems. Our software called the EMS adds transparency into the operations and processes, and it can span all the areas in the banking, from credit approval to customer care to regulatory reporting. Actually, that's one of the really fun things of doing this job, is you see all the different parts. And with our software, we basically help the financial institutions like Citi, Caixa, or Deutsche Bank to operate more effectively and really increase transparency in day-to-day interaction. And I think this data and process-driven analytics perspective in bank operations helps really reducing risk and effective and transparency, especially if you're not working all from one building, if you work in a home or office environment. So I think that's more is now than ever the time, and really looking forward to discuss today on the panel.
Excellent, Bastian. Thanks for that. Corrado?
Yes. Here I am.
Tell us a little bit about yourself and what your experience and what you're doing now.
Little bit about myself. My name is Corrado Passera, and I am the father of 5 children. I'm now an entrepreneur after being the CEO of several large industrial and financial organizations. I'm Italian. I love my country, and I was honored to have served it as minister during the very difficult period of 2011-2013. I believe in free enterprise, but I do believe that our capitalism, at least the way we know it and we live it, has to evolve and become more responsible without losing its energy. And the COVID crisis makes this evolution even more urgent. I could stop here, but you told me that the self-presentation has to last at least a few minutes. So I will add a few details if you want. My first position as CEO, actually co-CEO, was at Olivetti in the 90s. It was one of the largest IT companies in Europe. And we turned it into an ITC company by becoming one of the main GSM players in our country, and opening the liberalization of that market. Second one, Poste Italiane, that is the postal service in our country. I was asked to become Postmaster General, something unbelievable and unplannable when I was at university. It was the largest Italian public organization, 200,000 people, probably the most inefficient. And we turned it into a logistic and financial service company. When I joined, the loss was in the round of 2 billion. We reached break even, and now it's a listed company that makes 2 billion euros worth of profit every year. Banking experience. In Intesa Sanpaolo, when we started, we were a rather small, a medium-sized local bank close to Venice, and merger after merger, investment after investment, acquisition after acquisition, we made this bank the largest in our country, and actually one of the best in Europe. Italian government, I mentioned it before. In 2011, my country, Italy, was in trouble, and we really risked losing our sovereignty. I was asked to be part of an emergency technical government as Minister of Economic Development, Infrastructures and Transportation. And luckily enough, we succeeded in keeping our sovereignty confirmed. Then I tried a political career, and I considered the possibility to run as mayor in Milano, but I failed. I didn't make it. At that point, I decided that it was time to create a totally new paradigm bank. It was the right time for the reasons we will discuss afterwards. And I founded, together with a group of very strong people, very passionate people, illimity, and we will probably discuss about it later. Which are the common denominators of all these experiences? Always innovation, always strong, very strong teams of passionate people. One last word about education. Bocconi University, Wharton School of Philadelphia, McKinsey and Company. But when I talk about the platform on which I placed my education, I think of my secondary grammar school in humanities. That probably was one of the most exciting part of my life. Is that enough? I mean,
yes, no, thank you for that. It helps to understand, you know, who our panelists are. And Henrik, I think you have joined us, not on video, but I think we can hear you. Are you able to speak with us and tell us a little bit about who you are and what you've been doing?
I hope so. Elisa, can you hear me?
I can hear you.
Great. Okay, so sorry, hopefully I will get the video turned on soon. So I'll be brief, and obviously Corrado is a very difficult act to follow, but maybe what distinguishes me is that about 20 years ago, I was the chair of the Economic Society at Warwick, and this whole summit was sort of my idea back then as an undergraduate. And I have to say, from very modest beginnings at the time in 2001, now 20 years later, it's really a privilege to be allowed to appear on something like this with distinguished panelists. In terms of my sort of day job, right now I'm a co-head of investment banking at Deutsche Bank, which is also the firm that I joined straight out of university, which involves all forms of capital raising and corporate finance in EMEA. And I think this is a fascinating topic, so I look forward to the debate.
Excellent. Well, I think we can all agree that 2020 has accelerated the digitalization across industries, including financial services. And I thought, perhaps, Bastian, you can tell us a little bit about where you've seen that acceleration most, whether it's interactions with customers that have really been transformed, or whether it's processes that have changed most, and how that's changing, how the financial services is interacting.
Yeah, I think the acceleration, and this is probably one common denominator, is really pervasive across all the different kind of use cases. And it's not only like what we're seeing with customers, with our partners, for a certain area or certain industry, because obviously with everybody working from home and in a COVID environment, you need to adapt your business process. And it's a big driver. And I had many conversations with my customers talking about them, how they planned projects who lasted for 2 to 3 years now in the course of like less than a half a year to really complete. So it's really hard for me to pinpoint in that regard. But I think particular challenge is everything which is was offline there, which required manual or personal interactions, when new things had to be found to accelerate that. And I think it will also drive really the consolidation, because obviously you get massive scale effects around that. And that's what we're already seeing, is the biggest player really benefit most from this trend.
Now, on that, I mean, Corrado, perhaps you can tell us a little bit about what you're saying. I mean, there do seem to be some trends that point to the fact that scale is really becoming paramount, particularly in financial services, particularly in banking. But you've seen, both sides of the world. You've seen the big bank, and you're leading a startup. Perhaps you can tell us how you see that evolving.
Yes, you're right. Consolidation is one possible strategy to react to the new scenario. The other one is specialization, because the four forces that are reshaping the banking industry certainly are the new digital technologies, but also the new entrants that are really crowding the traditional banking environment, but also regulation and the monetary policies are really factors we have to take into account. We will have new winners, we will have new losers, and for sure, traditional incumbents will have to invest heavily in innovation, and probably only very large groups will be able to do it. That's why one route can be consolidation. Most fintechs, let me say something maybe not so easy to say, but most fintechs and neobanks will not reach scale and will run the risk of becoming commodities very rapidly. Big techs, these are very important protagonists of the new world, will occupy larger and larger shares of services, especially those services that are based on data. So my assumption, our assumption, and a number of other entrepreneurs' assumption is that a new generation of totally new paradigm bank will be among the winners. But what are new paradigm banks? Are banks that have a business model totally designed around the new world, no legacy, totally digital, but I would say also human touch, totally in cloud, fully modular, because you have to continuously integrate fintechs, a new application. And like any other enterprise, you have to develop cost advantages that are sustainable. At the same time, you cannot be a universal bank. You cannot be anything to everybody. These cannot be afforded, not even by very large groups. So focalization, and that was our choice, was to concentrate only in markets that are underserviced, growing, and where traditional players are not good at. And if you want, we can talk about it. And that's the reason why in 2 years we were in PowerPoint 2 years ago, and we are a 4 billion bank now with 600 professionals.
I think it might help to explore this area, to follow the money really. And Henrik, perhaps you can help in this regard. We've seen that financing markets have remained open, in part thanks to the trillions that central banks have been injecting into the system. But where have you seen money flow to when it comes to the intersection between finance and technology?
Well, I mean, the money flows, as you say, are immense. And I think probably the most recent theme, which we can see all over financial markets, is the amount of investment that's going into tech generally, and fintech in particular. And it's led obviously to some extreme valuations, and very successul tech IPOs, for example. But I think what's going on is actually a bit broader than that, because what's happened is that since everyone's working from home and people are having to adapt their business models to this new reality, we're seeing an acceleration of fintech topics also within large organizations. So for example, at Deutsche Bank, from one day to the next, everyone had to start working from home, and you can tell that that's already leading to efficiencies, a lower carbon footprint due to the lack of travel. So I think once we come out of this, things will not go back to normal, but the acceptance of digital behaviors is going to be much higher across the board.
But is it fair to say that in terms of the public markets, we've seen a lot of that money go into digital payments? I mean, we've seen some of the biggest companies, some of the bigger payment providers really rallying quite strongly in the last year. And do you see that continuing?
Absolutely. In fact, there's been consolidation in the sector as well, with the Nets merger that's going on right now. But payments is only part of the story. But clearly, one of the behavioral changes, I have an anecdote for you, is that the use of cash has drastically dropped, even in places like Italy, where cash was previously sort of king. And so I think the revolution is definitely in digital payments, but it's going on everywhere. It's pretty broad-based. So I wouldn't necessarily highlight digital payments as the only thing that public market investors are chasing.
I wanted to come back to Corrado for a second, because you make the point that there is room for niche players, but what we have seen anecdotally certainly is some of the neobanks not doing as well through the pandemic in terms of customer acquisition, because particularly depositors tend to flock to businesses that they're most comfortable with, companies that, banks that they're most comfortable with, so the established players. Do you see that as a hindrance in starting a new bank, as you have done?
I think that funding, collecting deposits, is the least of the problems. I mean, the amount of money available, the amount of zero yield deposits that every country, certainly our country, but all European countries have today, make a collection of deposits very easy. We collect in Italy, we collect in Germany, but let me say that the problem with fintechs, but in general with banks, is to have a very balanced funding strategy. I mean, you cannot rely on side deposit. You have to have a very structured and balanced and low risk funding mix. And so you always have to combine corporate, institutional, and retail funding. You have to combine, and you have to, in my opinion at least, match maturities, and your lending activities have to be matched with deposits of more or less of the same duration. Let's not forget that the big troubles we all suffered at the end the 2009 were caused by this mismatch. 2 points that Eric made were very right. Fintechs can find their word to develop also within large organizations, and they will be, large organizations can be incubators of fintechs, but real new paradigm banks are banks that have internally totally new IT architectures that are modular, in cloud, and not mainframe based. And because if you are a large organization, you can certainly, and you have to add fintechs, but if you don't change deeply, structurally, the way your IT systems are designed, it's very difficult to get to the level of cost income that the new environment requires. Payments, he was right in all what he said. In my opinion, it will be very difficult to make money in the payment world because of consolidation, because of the size of some of the big players, and because some of the providers of payments do not care about making money on payments, because it's a sort of add-on of other businesses, over the tops, e-commerce people. They provide payments almost for free. And for independent provider of payments, with the exception of the very big ones, it will be damn difficult to make money.
So is that what's going to lead to consolidation, Henrik? I mean, we talk about consolidation in digital payments, being, we take it for granted, but can you explain a little bit why, what are the dynamics behind that?
Great, and hopefully everyone can see me now. I'm online, excellent. So like, I think what Corrado says is exactly right. I mean, and it's a search for scale. So if you think about what's happened in the payments industry, it was originally mostly owned by banks in relatively small scale. And then eventually the private equity industry came in and started buying out what banks were selling. And then what we've since then is a roll-up strategy across Europe and across the world, as scale and entering different markets allows you to benchmark your products and do them across different jurisdictions. So it's really the same story as a lot of tech, which is if you're doing it well, then the best strategy is to keep acquiring your competitors and try to build unassailable market positions. One thing that obviously is very important, and this is something which we feel keenly at a big bank, although again, payments is not my area directly, is the role of regulation. And that's something which needs to be managed carefully. We can all, in sort of a blasé way, say nobody needs bank branches, but that also leads to accessibility issues to people who aren't as digitally savvy. It also leads to job losses, obviously, where there's a social element to that. So I think all of these things need to be managed appropriately. And one thing that I'm sure regulators across the world are looking at is how do you allow the innovation and growth to continue, which delivers great service, but without causing unnecessary risks.
Absolutely. And I think we're going to have a deeper discussion in a little while about regulation, Henrik, because it's absolutely critical to, how the industries evolve from here. I wonder if I could bring in Bastian for a moment to look a little bit ahead now, sort of the short to medium term. Where do you see the biggest impact of digitalization in financial services? Is it mostly sort of the plumbing and the efficiency that's going to change, or is it more the customer experience that's going to improve? How do you see that evolving?
Yeah, it's really hard to say because it's multi-layered. I think it will help us basically providing better experience in all the parts of from a traditional back office plumbing efficiency. So for example, if you look at traditional KYC processes, they are still very, very complex, take a lot of time and effort, and despite all the money and resources put into it, many banks struggle and we have issues with the regulators.
So this is know your customer, right, Bastian?
Yeah, know your customer processes. So basically, if you ever signed up for a bank account or try to do it for a company, you will know how complex this is. And if you're multi-region, that they have literally hundreds or sometimes thousands of people working in these processes, and they are not very modern. And they are important because obviously there is also like a regulatory aspect towards this and to handle that. So I think there's a big momentum there, and it will also contribute, I think, towards the consolidation what we saw beforehand. Because if you're a big bank, if you can do this really at scale, there's so much potential. And this is what I, for example, seen with my customers on the back office side. So there's cost scale to handle that and less regulatory fines and stuff like that. But obviously also the front end and the customer facing interactions, I think you can completely transform the customer onboarding. And you already see this, like if you, for example, look at the neobanks but also traditional banks adopting a totally new way of running business, where in the past it may took like 10 days to get an account set up. Now this can be done in a matter of a few hours, really handling that. And this differentiates because, for example, in credit lending, if you do this, I think one of the key aspects what we see when our customers are successful is you need to provide a really good quality reaction time, because it takes too long. Your customer already takes an offer from another bank and moves forward with financing the house with their offering, because in the end it's a commodity offering. You can only differentiate where the price and the service that you're offering, and obviously price is tricky, especially in a low margin environment that we're currently suffering with the low interest rates. So it will be all of us.
So what kind of role do you see AI playing in finance, both on the commercial lending side, but also, I guess, in asset management?
Yeah, so let me give you one example on the lending side, how this can really transform the business. So one of our customers that's very successful is CaixaBank in Portugal, and they are suffering through COVID a much higher challenge to collect their loans, service them. And I helps them tremendously to really prioritize, find out, also treat their customer with a much better service level. So it allows you to transform previously manual activity into that. So this is a way, but if you ask me, we are still scratching the surface where this can be applied. Many of the processes running in financial institutions are highly complex, and so far there is a lot of still manual work applied there. So this is on the process side. Obviously the biggest impact will be in trading, in making really machine-based decisions, which we already see in the market strongly, but especially for back office as well as front office process, I see a lot of potential. And that's what we also are doing every day with our customers, really helping them enhance the execution capacity.
And Henrik, is that something that you're coming across as well? Is AI reconfiguring how you go about your business?
Yeah, I'm starting to think this might be a little bit of a dry topic for an undergraduate seminar, because I can. It sounds like Bastian, you have the same thing. I can talk about KYC for hours and days because it's such a big topic. Look, I agree that what needs to happen inside every organization is part of what Bastian's describing, which is you need to automate processes. You have to create straight through processing. And there's huge amount of investment that needs to be done. And obviously at the same time, there's startup organizations that are looking to chip away at the existing business because they're able to offer convenience and so on. AI in particular is absolutely a big part of it. although you need to sort of narrow down what that means. But to the extent it can help guide decisions like mortgage approvals or credit work, it's obviously something that can reduce the manual impact. But again, I think what you might ask is, how do you make sure that whatever algorithms are put in place, don't discriminate and cause other problems? I mean, that's something that you've obviously seen on the trading side, where if everyone has a similar algorithm and they're all looking for the same signals, you can cause things like market crashes.
Right, and to that point, I was going to ask Corrado, particularly given his his previous role, in government. We've seen credit decisions relying too much on machine learning, leading to bias potentially in terms of who gets credit. I mean, what worries you most about AI in finance? And do you think regulators and governments are paying enough attention given the speed with which the developments take place?
Let me say that I agree with both Henrik and Bastian said. Artificial intelligence, like consolidation, have different impacts in different segments of the industry. For sure, in everyday finance, let's say plain vanilla kind of finance, we will see new players and especially over the tops and e-commerce people practically covering the market because they have all the data that are needed to give credit. I mean, if you are Amazon and you know everything about your merchants, you know what they sell, when they sell it, how much they know, their prices, how their inventories go. I mean, just with an algorithm, you can get also, you can give them also loans, credit. In specialty finance, in managing UTPs, for example, that are difficult credit situations, that is totally different. So I would really subdivide the word in retail, corporate, everyday finance, and specialty finance. I see artificial intelligence becoming very important in whatever is the relationship. So from the user experience to the know your customer issues, for sure it will be crucial in terms of risk management and credit. And actually, I do not expect all the banks going the same way and sort of becoming all the same in terms of credit evaluation, both in user experience and in risk evaluation techniques. Creativity and research will be a competitive weapon and will be able to differentiate the behavior of the different players. What banks will need will be also skills and experiences from other industries. 60% of our people in our bank do not come from from other banks, come from 192 companies of different universities from different worlds. So I actually do not expect that in specialty finance we will have this uniformization that you're rightly considering as a risk. Also in cybersecurity, that will be quite an issue. Artificial intelligence will be an important weapon to manage all the complexities. And cloud computing probably there is the only choice for most of the players. We will get back maybe afterwards on legislations in general terms, but as far as artificial intelligence, for sure, legislation has not yet addressed the deep implications of what can happen.
Right, and to that point, I read a recent study that also showed that the fintech industry in particular is attracting fewer women than men in terms of the use of fintechs. Do you think that, Corrado, do you think that there needs to be additional policy measures to make to ensure that financial services in the future remain inclusive?
The world is moving in the right direction. a number of pieces of legislation in the past, especially on the composition of boards, have helped to move the world in the right direction, and we have to keep with these kind of rules, especially at the level of boards, much more difficult to impossible actually to have quotas in the management ranks of companies. But I see things happening. Examples and emulation is the main thing we can have to push in the right direction. We have our board is chaired by a very strong and capable woman, 40%, and probably in the future more than our board members are in that direction. And the salary gap, the gender compensation gap has to be zero, and we have to expect from fintechs first, but from all the players in the financial world to guarantee that minimum condition for attracting both women and men in our world. But I see it happening. As a minister, when I passed the bill on startups that made our country much more friendly, and that created in a few years more than 10,000 startups, we had the special financial support for companies created by women. At the beginning, that is right. At a certain point, you have to have a level playing field without, let's say, positive discrimination for women.
Now, one thing that I did want to touch on briefly is, the cyber threat. Given that the threat from cyber attacks has often been, or certainly pre-pandemic, was one of the biggest worries among executives, right across all industry, not just finance. Bastian, perhaps you can tell us a little bit about what companies can do to protect themselves adequately, to mitigate those risks.
Yes, I think that's for every company, but particular companies with a very strong digital assets and a lot of important data, absolutely crucial. So for example, for us at Celonis, this is really top of mind. And I think what you can do, you need to build obviously a strong culture across the organization, and you need to invest into the topics. So having a strong security organization, having a chief information security officer, and the right type of personnel and technology really to drive that, and also embed it in your business model and make the right type also of risk reward decisions, where what type of business model do you run, what kind of risk exposure they have. I think you have quite a good way to handle it, the exposure, because there is powerful technologies available to safeguard it, to handle it. And I think this will also be an opportunity to become more and more privacy enhanced technology by itself. And obviously we as a technology vendor have also a big way to contribute here, because there's different ways how you can set up an application. If you set it up very privacy and security minded, it helps all the users to use that. And this is a paradigm. If you bring it in your organization, it can be even a competitive differentiator, because you need to leverage it. There's no way to not work with the modern technology, leverage the data. So we need to all find ways to protect them so we can do it in a reasonable risk exposure.
Indeed. Now, Bastian, while you have the floor, I wanted to quickly move on with my questions, so we can then take questions from attendees. Tell us a little bit about what you think investors look for in the next fintech winner, given what you've been able to achieve so far.
Yeah, currently it's obviously, like as Enrique also mentioned, it's a very hot market, and there's a lot of interest there. But I think the key themes is always the same. You look for someone as an investor for companies that in the end can get a very strong market position, that have the tremendous potential to, in a certain niche or area, really become the category winner. So you need to have a large target addressable market, and you need to have a certain type of entry barriers, because if you have an attractive market, you can be for sure that competition will try to enter it from new players and established players. And you also need to have the right type of team to capture that opportunity. At least that's, I think, in my view, the key things that are consistent going on and showing the track record over that. And then obviously you have continuous waves of hype of new technology towards that. But yeah, currently there's a very good funding environment, as we all see. Basically, there's a very low interest environment. So technology is one of the few items where you can still invest and get returns. So that's why a lot of money is pouring into that, and the valuations is really going up because there's so much scarcity for long positions in these companies.
Now, one of the main trends we saw in 2020 was the explosion of blank check companies, SPACs, raising funds in the US in particular, and merging with some, including some technology companies. Henrik, do you see more of that coming to Europe? I mean, Corrado might want to speak to us later about his experience, but do you think they'll be seeing more of that in Europe? And how much do you think they might change the prospects for fintech companies?
Well, I think what's great about SPACs, and there's clearly some risks as well, but what's great about them as a structure, it's really a democratization of investment for your average person. So, you can't, as a normal retail investor, access venture capital funds. You can't access private equity funds. And by listing SPACs on stock exchanges, that allows people to participate in those investments, with relatively small amounts of money. And most importantly, perhaps for the retail investor, they don't have to tie up their capital for a long period of time. So I think that's why it's exploded in the US and why it's here to stay, as a product. On whether it's coming to Europe, I mean, we have been relatively prominent in the SPAC space, both in Europe and the US. We did an organic food one at the end of last year, and we're going to launch another one, actually a German tech-focused one, imminently. And why I think this makes sense in Europe is that, Europe in finance tends to follow the US, but with a time lag. And I think investors here have seen the success of some of the investments that have been done in SPAC form in the US. And now we're sort of inundated with investor demand, for that product. And I'd say also from a sort of a promoter perspective, a sponsor, it's just a really efficient way to quickly raise capital if you have conviction. And fintech is absolutely front and center of that, but not just that. Also, things like ESG. There was one done this week that's ESG focused in Amsterdam. Organic food, as I said. So it's all over the map. But fintech is a big focus.
And Corrado, perhaps you can tell us about your experience, given that it was quite trailblazing at the time now, with the benefit of hindsight.
I obviously believe in SPACs. We raised 600 million 2 years ago. But I do not believe in, let's say, in any kind of SPACs, because there are different, very, very big differences in different SPACs. I don't believe in totally blind check, just raising money and then we will see what we will do. I don't like it, and I think that some of those exercises have disappointed the market. I believe in SPACs where the sponsors at least focus their investment strategy since the very beginning in one direction, so the shareholders know where they intend to go. But I even believe more in what I call entrepreneurial SPACs, where the sponsors are people with high skin in the game who says, I want to do this kind of investment, I want to buy these kind of companies, I want to develop these kind of projects. And the sponsors are not just escorters of the shareholders for a short period of time and then they leave, but they are committed to make shareholders happy. In our case, we said that we will be a small bank and we will transform it in this way, and we are committed to reach these kind of results. And probably that was the way that made it so easy, let's say in quotes, to collect the 600 million. So this is an experience that not only ours, but this is something that shareholders of new SPACs will take into account. Not totally blind, but at least clearly directed kind of SPACs will be preferred, in my opinion.
I have one more question on regulation, if I may, because I think in the last week we've seen two significant developments. We've seen in the UK stepping in to regulate the buy now to pay later companies, the Klarna types that allow you to make spread out your payments on purchases, from clothes to furniture. So they're handing out credit in effect. And then you've seen obviously the trading frenzy around GameStop attract regulatory scrutiny into Robinhood, and the way it presents itself as a free trading platform. Corrado, again, do you think that we'll be seeing more of this type of regulation, and does that change the opportunities for fintech?
I might sound a bit impolitical, but I would say that for sure. No, first of all, regulation is very important in any aspect. I mentioned a few minutes ago the startup bill that made possible to create a number of startups. So regulation is always important, and I see increasing importance of regulation that tackle the issue of anti-money laundering. But let me say that there are already a number of very important pieces of regulation throughout the world that are there, but there is not the courage to use them fully. I'm talking about antitrust legislation. I'm talking about privacy laws. I'm talking about fiscal and legal havens around the world. I mean, some of the main problems of our capitalism have to do with the lack of courage in using completely and effectively and with the right courage the spirit that lies behind antitrust legislation, privacy legislation, and fiscal but especially legal laws that are around the world. So if we apply those pieces that are already available, we would make our capitalism much more acceptable and much more efficient at the end in the world, and that would benefit also the development of new companies and also of fintechs. But we have to look at the picture more in general.
Now I've got to start taking some questions from our attendees. One for you, Henrik, perhaps. I mean, it doesn't affect your day-to-day business, but it does affect your institution, Deutsche Bank. I mean, do you think big tech are going to basically supersede traditional financial institutions? And if yes, why? Or why do you think that is, or why aren't they going after traditional finance?
Wow, existential question. So I think, I mean, given the sort of highly regulated nature of large parts of banking, and banking is obviously a very broad topic, right? So you've got everything from retail banking to commercial banking to investment banking, where I work. It's large and complex, and there's many competitors, both from the inside of the sector and outside. And I think banks will continue to have a role to play. And one great example was that during the COVID crisis, just under a year ago, a lot of companies really struggled as the economies got shut down. And so one of the things that role banks played in that, which was in sharp contrast to the Lehman crisis, was just to immediately pump out lots of liquidity into those kind of companies. And this is sort of a core function for society that banks fulfill. And I think the grade for how we did that during the COVID crisis has been excellent. So it's just an example that it's probably too broad a question to answer. Of course, the business model will evolve, but banks exist for a reason, for the transformation. And I think for the large tech companies, the Apples and so on of this world, and Google, there's probably other things that they will find easier to compete in and create returns in than trying to replicate universal banking.
Corrado, do you have any thoughts on that?
No, I fully agree, and the winners take all kind of effect that we are suffering from is something that could be managed with legislation already available. The intrusion in everyday people's life could be managed with present and available pieces of legislation. So it's really a matter of political will. In terms of pushing and encouraging innovation, governments can make a lot, and Europe also with the recovery fund and with the measures that have been decided the last months can play a major role. We have to support in a major way companies, big, small, medium-sized startups that invest in innovation and trigger through innovation a new phase of growth, because without sustained and sustainable growth, the social problems, even more than the economic problems we are facing, could not be solved. So it's really time of wisdom or wise politics, wise management of each of our countries, but also of Europe as a whole, because some of the challenges we have in front of us cannot be managed at the national level, but some of them cannot be managed if not at the global level. So the G0 situation in which we found ourselves in the last few years, and luckily probably we are turning back into a multilateral system, is a very urgent change the whole world requires.
Now I have a great question for all three panelists, which we're going to come to at some point. What is the role of digital currency going to play, and does it make a lot, does it make banks obsolete, and how do we see digital currency being adopted by central banks? Bastian, perhaps you can take it first, and then we'll move on to the others.
Yeah, no, happy to give my view. So I think the digital currency is obviously a very, very valuable addition to the mix, and there is use cases. Also, for example, if in a privacy enhanced manner and also in certain type of transactions, they can also really enable new business models. I don't think they will make traditional banks go away, because there's still like a lot of services they are providing. I think it's like with any innovation, it will probably like help in the end to shape that better with for consumers. Nonetheless, I think we have to look into how to make them usable in the right way. Obviously, there's high value fluctuations, which currently makes it difficult for to use a currency, because a currency that fluctuates very much is not, it's good for speculating or like trading, but not very good to run a business off. But I'm excited about them. I think it's a big potential, but it will take a bit more to really settle in and use in different use cases, and will be part of the pay mix going forward.
And Henrik, what are you seeing in terms of the adoption of crypto assets in the wholesale business, for example?
Well, I think what's actually very exciting is distributed ledger technology in general, because there's lots of inefficiencies in banking, which can be made simpler and cheaper, with using distributed ledger. I think maybe it's more of a topic for your central bank panel, but digital central bank money is I think coming and also super interesting. I think cryptocurrencies, like some Bitcoin and so on, it's really acting as a speculation product, and we can argue what's better, Bitcoin or gold. I mean, both in a way have limited applications to real life. So I think it's an interesting store of value. I think it really enables some technology change, but I think rather than the individual cryptocurrencies, I think it's the just a thought process that we can have a centrally easily accessible record of who owns what, and that I think is going to revolutionize parts of finance.
Corrado, where do you see the changes coming, and how quickly? I mean, we have the ECB saying they're studying a digital currency. You've got China moving fast, quite quickly on that. How does the regular banking industry sit with this?
Digital currencies will certainly be part of our future. Actually, cryptocurrencies, hopefully, at least in my opinion, will not. I look forward to pay digital euro, digital renminbi, digital dollars, but I strongly believe that national or supranational currencies cannot be privatized. I think that cryptocurrencies as an artificial asset of investment reminds me much the tulip mania of the 17th century. So in that respect, I'm very much against what is happening. As far as distributed ledger technologies, no problem. In fact, I agree with what Henrik was saying, but let's not forget that currency is one of the last pillars of the way our societies are designed around, and probably our democracies can be defended.
I have a question from our attendees on talent, and I did want to touch on this. And again, a question for three, particularly, how you make the shift from studying economics to fintech. But I guess the way I would ask it is, what do you look for when you're recruiting talent generally? What kind of qualities are you looking for? I muted myself, sorry. Henrik, do you want to take that first?
Of course. I mean, Deutsche Bank's a big recruiter of graduates, across different kinds of classes of engineering, and actually Warwick specifically, is a big target of ours. But we are at the moment, we're trying to evolve with the way the world's evolving. So diversity is incredibly important to us in terms of getting a broad slate of candidates with differing backgrounds, because what we find is that if you bring in people with different backgrounds, it just ultimately leads to better results than just looking for a sort of a cookie cutter model where everyone's the same. And I think to all the panelists, to all the attendees, what we look for is not necessarily skills that have been gained at university. I mean, university is very important as a training ground and as a way to sort people, but it's really attitude, enthusiasm, willingness to take on challenges. Those are the key things. And I think whether you go into a traditional bank or do an engineering degree and start your own company like Bastian has done, as long as you have those sort of drive, enthusiasm, and openness, you're going to succeed in whatever you do.
Bastian, what do you see? Also in terms of your role in advising Germany on technology, what do you see as the key attributes that attendees should work on?
Yeah, I think it's obviously super crucial to have the right type of talent, and also to, let's say, bring this mix basically together. I think that's one of our biggest opportunity, and also what really excites me. So my advice really to the attendees would be, you have obviously an enormous opportunity. Now you can really shape your career and write the right type of experience. I would just leverage that. Can just tell my own story. I only founded Celonis because I was in a student association where we did called freelance consulting projects, and then I discovered this problem and also met my co-founders, and we got going. So my key advice would be really try to get as much as possible exposure, test out different things. So internships is a great way, different extracurricular activities to learn that, to have it, because it's the greatest privilege that we get access to such good and powerful education. And this is also on the flip side, from a government or a company perspective, we need the great talents and everything which we can do there. So I think we need to build even more programs enabling that. That's also, for example, we at Celonis, where we run and own our academic alliance program, which is a big effort, a dedicated more than 10 people and a significant budget commitment just to provide exposure of our technology, what we do to students and researchers, so people can find out if they like it, if they want to do more, or if they think it's crap and they should do something else, which is also a very important value exercise. So try to get a broad exposure, build on your skills, and then I'm very confident that you will find a good future.
Corrado, you mentioned diversity earlier. What else are you looking for? And you know, in terms of your own reinvention several times, you know, what's your takeaway on how to do that successfully?
If Eric is right, and he's right when he says that creativity, innovation is key. The diversity becomes, as we said before, the key selection process. We went from 0 to 600 people in Illimity in these last 2 years, and deliberately we decided to attract people with totally different skills from 192 different organizations, 16 industries, 14 countries. That for a small company like ours is quite a diversification. And obviously these Babel towers are more difficult to manage, but they are an engine of innovation like nobody else, provided the top managers like it, believe in experimentation, in try and error, in the attitude that is typically not typical in large organization. What keeps such different people with such different attitudes, experiences, and skills together are at the end also common values. Because if you want to create an organization that innovate, but at the same time keeps together such diversities, you have to have at least in common the deep values of independence, of liberty, of entrepreneurship, and this is something that is not always easy to select in hiring the people. And coming to this point, probably as far as I am concerned, the basic skills that helped me the most were the basics I got at the secondary grammar school I mentioned before. Humanities in certain terms of capability to place issues in a larger context, putting together and love diversity and potentially opposite points of view is what probably helped me the most in the last 4 or 5 professional lives, and not only professional lives.
Great. Now we have the billion-dollar question. How can we tell if fintech startups' valuation is accurate? Henrik, perhaps you can tell us a little bit about what we've been seeing in the markets, but I guess what's been fascinating the last week or so has really been sort of the intersection of finance and technology and social media, leading to quite significant impact on financial markets. I wondered if you could tell us a little bit what your takeaway on what we've seen in the last couple of weeks is.
Well, I'd say like it's been obviously very newsworthy what's gone on in the US, and it's sort of tempting to see it as a victory of the underdog against sort of established financial players. If the sort of GameStop thing is what you're referencing. Look, I think it's democratization of finance again, right? I mean, if it shows the power of crowds, but crowds can also delude themselves. And I think objectively, while you could say that a company like GameStop is worth whatever someone is willing to pay for it, you at some point need to take a step back and say, it's a retailer, which relies on physical locations, and so I think come back to regulation. I think it's great that there's these opportunities for people to express their views, but when you see gyrations like that, there's lots of opportunity for fraud, for market manipulation, and I don't think the last word's been said on what's happened in the US last week. People ask me can this happen in Europe? And at the moment in Europe on the equity market, there isn't the kind of retail flow that you see in the US. I mean, the likes of Robinhood and others, seem to, especially through the options market, seem to really increase the people day trading kind of environment where people sit at home and trade. Europe, the flows are very different. And at the moment, I don't think you could see quite the same extreme things. But it's a lesson for everyone, which is power of crowds can really change outcomes. And I think hedge funds who make a living shorting companies right now, are all looking at their portfolio and sort of questioning themselves, is this a business I want to be in?
But to follow up on Corrado's point about regulation being there, sometimes not being applied as it should be. Do you think, Henrik, that the regulation's there, or are regulators struggling to keep up at this point with the speed of innovation?
Well, there's plenty of regulation against so-called pumping and dumping, right? And it's not like it's a new phenomenon that people on message boards or and others would say this is the hottest stock ever. They have a position and then they sell it at the top. So I think clearly the speed at which these things happen is rapid, and it's very difficult to to stop them while they're going on, because regulation just doesn't move at that kind of speed. But I think what's very important now is that these phenomena are properly investigated, and that appropriate actions are taken to the extent there has been market manipulation.
We're coming up against time very soon. But speaking of valuations, I mean, clearly there are, by some measures, a lot of assets seem to be record valuations. I do wonder to what degree this worries you about your outlook for 2021 generally for your business, individually, I mean, and the possibility to continue to grow in financials and financial technology. Corrado, maybe you can start.
Yes, I believe in evaluations that are based on two things and that are very old-fashioned maybe. One is the size of the need a company wants to serve, so the size of the potential market, and the second, the competitive advantage and the sustainability of those advantages. But because too many fintechs, too many startups become commodity in a very short period of time. So if the size of the need of the market is large and growing, if the competitive advantages can be defended, and the company has the origination capability to reach break-even and profits before running out of money, those are the basics. And if we apply these old-fashioned kind of criteria to some of the evaluation we see around, some of them are really very irrational. While there are, while the room for fintechs and for neobanks that comply with those three rules are very many. So I see a lot of opportunities for investors and for entrepreneurs today, not based on simple contacts, number of customers.
Profitability, yes. Bastian and Henrik, I think you have about 40 seconds each.
You mean on the valuation I think it's like what Corrado outlined is very well. I think there's some of the assets where it's definitely justified because they have a very long-term potential. They have a unique solution, a strongly target addressable market. So I'm not so worried because the long-term model is definitely there, but there's others also. So I would always look at the fundamentals. Basically, can this really grow into, like, for example, many of the cloud models, it's just still the beginning and there's such a huge potential, especially with as we had it before, the winner takes it all dynamic. I think it's justified, especially looking also at the low interest markets. But in the end, you have to, I think, evaluate every asset basically individually and see if it meets the merits and how also the industry will shift. But yeah, Henrik is probably more the expert on assessing broadly that than myself.
Henrik will have the final word on this. 30 seconds before we wrap up.
I think Bastian, clearly, as the owner of a fintech firm, I wish the valuations keep rising for you. I'd say, like, obviously markets are underpinned by central bank action, and we talked about fiat currency, negative rates, and so on. And I think that's concerning, but I think it can carry on for a long time. And so I don't see an immediate market crash ahead of us. But there's lots of tulip bubbles that are building up, and unfortunately, those tend to end in tears at some point. And maybe what I'd end on is, actually, it's been a great pleasure speaking to all three of you. And Corrado, especially, I agree with you in terms of your views around Europe needing to come together to apply the existing laws that exist for social benefits. And Bastien, I really hope you can solve everybody's KYC problems. We're a big buyer of that.
Well, I won't have time to wrap up with much, but thank you very much. It's been very interesting.